Good morning, everyone. You're all very welcome to the FOMC preview this evening. So there's a couple of things I kind of want to take people through just to, from a fundamental perspective, and obviously touch upon these different sections ahead of tonight's all-important FOMC Fed meeting. So this evening at 7 o'clock, Fed Chair Powell will be leading his FOMC troops for the latest, I suppose, updates in the federal funds interest rate in terms of where the US central bank, in other words, sees obviously the current interest rate, of which we're looking for a 75 basis point increase. So 75 basis points is 0.75%. And we can see that there very, very clearly. So it really kind of just does look at, I suppose, all eyes on, I suppose, the rate today. And of course, then a simulating approach. Now, of course, just looking kind of multiple calendars, 2.5 is kind of where we're currently at. 3.25 is general the consensus of which is currently priced in. Of course, anything above a 75 basis points is hawkish by the markets, and we'll probably see a continuation in the momentum we've seen since last Tuesday off the back of the CPI, higher than expected inflation I suppose narrative. Now, there's a couple of other points of interest that we need to look at. So when it comes to FOMC, there's kind of three things that I focus on. One is the current rate. What is the rate that kind of comes out? And of course, then a simulating approach. So we know that the target rate is obviously 3.25%. The next thing we're looking at then is the summary of economic projections. So within the summary of economic projections, they look at all of the different pieces of the economic data to see and to give kind of forward guidance of what they're looking for. And that forward guidance is comprised within the dot plot. Now, of course, this time around, they only do the dot plot every kind of second meeting. So it's effectively once a quarter. And so the last one was in June, and we had seen that this is where the current dot plot is. Now, the expectation 3 months later is that the dot plots will probably be higher. So at the end of the year, you're going to see probably all of these filter up into this region here around 4%. But I suppose from a 2023-2024 perspective, it's all about watching the dot plot of where the Fed broadly as a collective sees the interest rates next year. Okay, are they going to be continuing to kind of remain fairly high or maybe higher than 2022? Or are they looking for a more gradual stabilization? I'm personally looking for a lot of these dots to be located at or very close to 4, maybe 4.25%, being the kind of the broader consensus. And then, of course, see in 2023 probably the same, and a tail off in kind of 2024. Now, the longer term projection never really changes because the longer term goal is to see inflation between kind of 2.5%. That's why, with the exception of two members, you're seeing all of the dots placed within that level. And normally speaking, the federal funds rate will match the inflation rate, of which should be between that 2.5% level. So this is a very, very useful tool. If people have 10 minutes today, I'd recommend taking a look. I'm not expecting much volatility into the FOMC because I suspect a lot of participants, a lot of institutions will be very much on the fence waiting for the next, I suppose, directive by the Fed, and of course giving us then that clear consensus of reaction. Now, of course, on the FOMC, we've got these projections. So obviously the current projections of where they're seeing. Now, these are slightly, I'm not going to say they're off, but of course they're kind of averaged out. So you're seeing 3.4, 2.5. You generally never see an interest rate at 3.4. It's kind of the average. So my goal is to probably see the current projection at or close to 4%. The second year projection next year, probably anywhere between 3.5 and 3.75. That's 2023, that's 2024 and the current. So I'm expecting the current end 2022 being close to 4%, next year 2023 being 3.5, 3.75, kind of in that region until they get a real handle on this inflation. And then of course 2024 looking to try and phase that back in, and then of course the longer term bringing it back into that 2.5% level. So this dot plot that we've kind of just mentioned here is going to be the estimation. So 4 in around this 4 again, likely. Then of course maybe a broad tick up into that 3.5 range, and then of course the longer run into 2.5%. So that's kind of what we're looking at there with the Fed's funds rate. So that's the second element. So the first is the actual interest rate. The second is the summary of economic projections and the statement. And then the third is the press conference and the Q&A. So Powell will step onto the stage around about probably 7:30, 7:35. And then you'll see kind of the reaction of his commentary, of his wording be factored into the short-term price action in the trade. And so we'll see that very, very clearly here today, tonight at 7 o'clock. So it's just being aware of that. So those elements collectively are what I'm paying very, very close attention to this evening when it comes to that. So if you want to look at kind of the global central bank interest rates, there's globalrates.com/interest rates, and you'll see all the different central bank rates. So you see at the minute, the American rate, the Fed, is at 2.5%. Expectation is for another 75 basis points to bring it up to 3.25% tonight. And the year-end goal will be somewhere between 4 and 4.25%. That is the projection. That's the projection that I've kind of had pretty much since the end of the summer. Initially, I had a projection of 3.75% to kind of 4, but obviously the more hawkish increase last time round, and obviously the more hawkish increase this time round, is obviously going to add another 50 basis points to it. So going from 3.75 to kind of 4.25 is now the very, very logical solution here for these markets. So that's kind of the FOMC broadly. When we look at the markets, then factoring that back into the price action, we can see here that the dollar is holding much of its bid. Also, in a risk aversion, we're also seeing the yields continue to remain quite strong. Now, on the weekly, the 10-year yield is still at or close to 3.5%. It did get to 3.6 overnight. We have seen a little bit of a tailback, but in the last number of weeks or so, the US 10-year yield has been on a complete and utter rampage. It's gone from 2.6 to 3.6 in the space of around about 6 weeks, which is a fairly significant move, broadly speaking. And then, of course, then with the higher yields, we have obviously weaker gold. So generally speaking, if the yields are pushing higher, stronger yields, you tend to get weakness in gold. So there's a negative or an inverted correlation between the prices in gold and the prices in the 10-year yield. So if you're looking at that, so obviously, if it were a case that tonight was going to be dovish and we start to see the yields come off, then you're going to see a significant rally in the gold prices. Okay, so just understanding those correlations is ultimately important here as well. So gold at this moment in time, as we look at it, I suppose from a risk perspective, is under this higher time frame region here. There's been a lot of wicks at or close to this between 1675 and 1700. You can see that there very, very visibly over the last, I suppose, 2 years or so. There's a lot of times where we've come down and we've bounced off it quite significantly. But at this moment in time, gold is holding the 1650. So 1650 to 1675.80 is the current range today on the gold prices. And we're seeing that factored into the consolidationary movements since the tail end of last week. So the end of last week, last Thursday, last Friday, we've been pretty much going in a sideways skew. So we're looking to see how does the price action break out. We could see a little bit of a bullish sign today. Could we see prices potentially come back up into this 1720, 1725 level as a smart money order block area? Let's just wait and see. Okay. So very much, I suppose, the moves tonight will be driven off the fundamentals. So if it's good news, then of course the markets will obviously rally. But if it's hawkish and more of a not an unsustained outlook, but more of a difficult outlook is going to continue, which we probably expect it to do in some of its commentary, like it did last time around, then you could see the market sell off again. But as I said, a lot of this selling has been priced in the indices. If you look at any of these indices now over the last few weeks or so, you're seeing significant selling from last Tuesday. Then we saw that continued gradual selling into the FOMCs today, where we are seeing a little bit of a bottom. So this could be a potential sell the rumor, buy the fact scenario, that if they don't come out quite as hawkish, or maybe they're not leaning towards that another 75 or another 75 in December, that's going to be a little bit more bullish, because what's actually going to happen here is the markets are going to have to pre-price in where effectively the Fed were looking at 3 months ago. And that will mean a kind of a cyclical change in the reversion of the stock markets as well. So we just kind of need to be conscious of that. If anyone has any questions, please do reach out. I'm more than happy to explain or kind of answer any queries that there may be on that as well. And of course, as I touched upon earlier, the dollar pairs continue to kind of churn higher. The DXY it has now broken very close to this 111 level as we head into tonight's FOMC. So risk aversion is very much on the table at the minute, getting out of those riskier asset classes into the risk-free assets like the dollar, like the treasuries, as a hedge against this volatility or implied volatility ahead of tonight's call. So we did see last week, sentiment was obviously very, very positive. And we did have that reversal in the CPI numbers. Now, sentiment this time around is very, very hawkish. So could we see the reversal to the downside? Let's just wait and see. So there's two potentials there. I think you have to be nimble enough to be able to react accordingly ahead of tonight's volatility. And we're going to see big moves tonight, I suspect. Well, I'm hoping for anyway, but let's just wait and see. The FX pairs, we're still seeing those kind of grind lower. This euro is coming back into these lows here at 99. So structurally speaking, kind of all eyes to see how does the dollar fare out between this 98.80 and 99 level. If we're breaking this down, hugely bearish sign coming back into the markets again. And similarly again with the cable, okay, particularly if you go up to the 4-hour charts or the 1-hour charts, you can see that as well. The cable is slowly dying off again. Bearish impulse last week, further selling through the week into the end of the week. And since the beginning of this week, the cable has gotten smashed again. Heavy selling coming back in on the dip, and the markets have broken to new lows this morning. So again, very, very sharp movements, impulses, has broken the lows here at 113.50, and we have descended through that. Now, we did get to as low as 113. Again, it's the lowest point we've seen the cable at in decades. I'm going to have to go up to a monthly chart to see the ultimate declines here on the cable. You can see here that with the 2019 lows, the flash crash at 114 has now been engulfed. And we've actually, it's the lowest time that we've seen the pound in close to how many years is that? 85. It's 35, 37 years approximately. So just over 37 years, and that was at kind of 110, 112. Now we have obviously gone into 107s initially. So we could potentially see price action trying to take out these lows as well. So very, very bearish on the monthly. If you look at the cable prices at the minute, completely sold off, and it's now continuing this order flow of lower low, technical lower low briefly, all but briefly with that wick, and now where the price action's filling this down. So would it be surprising to see the cable go to 110 over the medium term? Well, probably not. But as we look at tonight's call, we're more focused on the shorter term price action. And as we see it at the minute, the cable is still continuing to sell off from those recent highs up here at 117. So that's kind of where we are in the FX markets. If we kind of look at the indices then very, very quickly, as I know it, S&P did sell off yesterday back into those local lows at 38.30. This longer run target, particularly at 3800, was an interesting area. I've got an order block area down here. There's a smaller candle down here at 37.50. So two targets that I'm looking out for to see if they're mitigated. See does the price action come into these zones. It would be ideal to see the price action ultimately find some sort of a bottom. But let's just wait and see. On the daily here, we're starting to see the daily wicks come through. So 1, 2, 3 wicks coming through. Today's price action very, very muted. So again, this could very easily go both ways. And I think it's just having a bit of patience today, I think is ultimately the wiser move than trying to guess what the Fed is going to do, because there's often been a mandate of don't fight the Fed. And if you do fight the Fed and you go the opposite way of what markets are taking on board what the Fed are saying, you will get stop hunted and you will get taken out of your positions. So just be aware of that. On the NASDAQ, obviously we know the NASDAQ over recent weeks has been more heavily hit in comparison to its compatriots, but again, like the others, is holding these bottoms here at 11.7. So we're very much stuck between this 11.7, 12,000 range as we speak today. And yesterday, those wicks coming through very cleanly. But broadly, as I said, markets holding that kind of 11.7, 11.750, and short-term highs just underneath 12,000. So that's kind of where we are on the NASDAQ. And again, it would be lovely to see this being kind of the bottom, short-term higher high, short-term higher low, and then start to see the market correct back into the upside. But it's, at this point in time, it's still very early to kind of confirm that, because obviously the fundamental isn't in tune. I'll be watching the fundamentals tonight. I will be trading it personally. And it's just really kind of taking on board the fundamentals as well, looking at the price action, seeing the battle between the buyers and sellers on the volume weighted profiles as well, and then obviously factoring that in accordingly. And then, of course, on the Dow Jones, very, very similar. We have mitigated this 30,500. So this order block area, 30,500 has been now mitigated. Sorry, guys, my mic has just completely fallen off. So let me just put that back on. So 30,500, of which we're kind of keeping a close eye on the range here between 35 sorry, 30,500, and obviously this shorter term region up here around about 30,009. So we have got initial kind of short term price action structure. If we're breaking through this, the likelihood is you're going to allow for another 200-300 point move in the Dow Jones, and it would probably see 31.2s, 31.3s as a potential area. But of course, it would be lovely to see this being the potential bottom and then see the markets try and correct. But as I said, it's a little bit premature for that. As you can even see, the 4 hours, nice close last night, but the session this morning and the Asia session last night, very, very muted, very, very consolidated accordingly. And of course, not to leave out the European, because we know the European markets will move in sympathy. FTSE again has rallied off this daily level at 71, 75, 72 that we've been kind of talking about for the last couple of weeks. We talked about it last week. Nice impulse back into the 75s. We sold off. We got that short-term relief rally back into 73s yesterday. The move yesterday with that weaker corporation tax potentially coming in the UK has definitely moved some markets yesterday, but we are seeing the FTSE hold at 71, 75. So again, consensus will be to see the price action literally holding this 71, 75 level. If we start to see this give way, then the likelihood is we're going to see 7,000 coming and factoring into the price action. And of course, on the last two, the DAX and Euro Stoxx higher time frame, 34s is holding cleanly on the Euro Stoxx, 12.5 is holding very, very nicely here on the DAX. And of course, if we take it down, the order flow at the moment is still very, very bearish in the DAX. Top formation, new lows, structured lower highs, consistently bearish order flow coming in into these structured area down here in the higher time frames. Now, if we go to lower time frames, as I said, we're still seeing that consolidation play out. We're still seeing the markets hold up fairly nicely, even though we've had this bearish order flow since last Tuesday. So this is the sell-off from last Tuesday, 13.5, 13.6, all the way back down to 12.5. So we've seen in the DAX from the wick highs last week, which we were standing to the kind of the overnight lows, you're talking 8% down in a week, which is a huge move in these markets. So again, structurally, bearish order flow is still playing out. Bottoms look to be temporarily in on the DAX, particularly since you look at the European Open this morning. But again, looking to see if there's any more of a kind of a sustained move in the DAX tonight, in sympathy with what's going on in the US as well. So 12.5 is the area to keep an eye on there. Of course, if we're getting closer or below that 12.5, then we're kind of looking at this higher time frame shift, continuation of bearish trending, and looking for those declines to come in even lower. So that's kind of where we are in the DAX. Euro Stoxx, as I said, 3,400. We're sitting at this short-term level here around about 3,450 this morning. So if I go to the 4 hour, you'll see these lows here around 3,430, 3,450 coming through. So markets again holding this bottom temporarily. And of course, on the 1 hour charts, we're seeing this consolidation form this morning after that up and down move last week. So we took the lows, we took the highs, and then we took new lows. So the order flow is still very much bearish because we've got lower lows, short-term lower highs, lower lows again, and we're now finding consolidation. So the markets might try and unwind this move today if we get a little bit of a bullish swing, and at which point then you're looking for a run up back into this 35.15, 35.20 level. Similarly, in the DAX, if that was to be the same move, then we'd be looking for that unwind, basically taking out this short-term bearish order flow and looking for that move back into kind of 12.8, 12.9 accordingly, which would be another kind of 250 points higher on the DAX as well. So that's pretty much it for the FOMC preview, everyone. So if you need anything or any questions at all, please feel free to reach out. We have posted 2 or 3 articles in the group. I have got the cheat sheet, which is previous comments by Fed members. We've got the ING, I suppose, crib sheet or cheat sheet as well, which looks at the different scenarios off of different rates. So that's definitely worth a viewpoint. And of course, we've got the correlation between yields and gold, because that's something people have asked for previously. So again, just kind of doing the research, I think, is important. And of course, watching the price action tonight, more broadly speaking, to give us that, I suppose, consensus, give us that kind of definitive moves. And then, of course, watching the price action accordingly as well. All right. Have a good one, everyone. Trade safe today, and we'll see you all later.